This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. As always, I'm Prashant. With me, my colleague Nigel, and we have the birthday girl with us here, Reema Tendulkar. Reema, hi. Happy birthday.
Hi, thank you. Thank you very much.
Happy birthday, Reema. Wishing
Just
you the
don't
best.
ask me how old I am. That's all.
I think I know, so I won't. But wishing you the best, Reema, for today and for the rest of the year. And may the coming year be even better than the past one. A cracker is in store for you.
Thank you. And I'm starting the day celebrating with all you lovely people.
What are you talking about? Age 18, right? Or 19?
Always 18. CNBC TV 18, we're always 18.
You know, there's a lot to track, right? There's,
Yes.
and I think the global stuff takes a little bit of precedence because there are two things happening in the next 48 hours. And, you know, that's essentially perhaps because, I mean, global stuff has not mattered for the last 2-3 weeks. The correction here has been in the mid and small cap part of the market. And irrespective of what's been happening elsewhere, we've kind of sort of danced to our own tune. Maybe that'll be a little different. Let me just explain. Let me pick up from where we left off yesterday. So it was a quieter session in trade as far as Monday goes, that is yesterday. Nifty Nifty there was intermittent selling, and this is a point that we've made over the last couple of days. It'll take a little bit of time after the kind of sell-off that we've seen. There are elections ahead as well. We're getting into the full blown political season. So markets will find some selling, which perhaps will continue to emerge at various higher levels. So the Nifty, for example, at one point was up 90 points. It ended barely higher. Mid and small caps ended lower, and the small cap index in particular was down 0.6%. There was fresh selling, which came in the last 30 minutes or so of trade. Now, there was in the US markets, right, the immediate kind of handover, there was a reversal. So Friday, US markets sold off, and yesterday, the US markets were up about 1%. Now, both I said this yesterday morning, looking at the US sell-off, don't pay too much attention to it because there was the huge amount of options expiring. Maybe the picture got distorted. And I would say the same thing for last night's price action as well. The Nasdaq was up 0.8%, but it was very idiosyncratic. I mean, you know, equities went up, yields moved up, dollar was higher. So different triggers for different markets. It was not a unified theme leading and driving US markets, different markets together. So for equities, what did it was, of course, the AI stocks. NVIDIA led US equities higher. Even as I said, yields pushed up. So the yield, the 10-year is across the curve, actually, 5, 10, 30. 2 basis points up. We're at about 4.33%. And dollar index is back above the 103.5 levels. Oil is the other one, right? Oil prices are continuously moving up, and they're now $87 a barrel. Morgan Stanley yesterday in their global note said that 90 is possible a little down in the year. So this is not a great look as far as India is concerned, which is a large oil importer, and actually for pretty much all oil importers. Now, this morning, you've got the Bank of Japan decision. Should be out in the next 1 hour or so. Typically, that's when the decision hit at 9 o'clock, around 9 o'clock, our time. Roughly there. And the Bank of Japan is set for the first rate increase since 2007, right? So there are so many, yield curve control and NIRP, there is, all kinds of things. But the point is, it's what they will do will signal that the Bank of Japan is finally starting to act. They're confident of getting to that 2% inflation number, so they're starting to act. The only thing is, and this is the good part, we've had so many source-based stories from Nikkei and other Japanese publications telegraphing exactly this, that, will the market be shocked and surprised when this happens? No, it'll be a very high bar for the market to get surprised. Now, the FOMC decision is tomorrow. And there is nothing which is expected, but there is an outside chance, as many are pointing out, that there perhaps is a hawkish surprise. And we've been talking about those dots, right? We'll talk more about that a little later, but that's only tomorrow. We react to it Thursday morning. Now, just to circle back and tie in the levels, Nifty yesterday saw a low which was once again at about the 21,900 level. It's been the low which is held for the last 4, 5, 6 trading sessions now, and the market's bounced and come off again. The other point is it's also not closed below the 40-day exponential moving average through all of these ups and downs, etc. And that, I think, these two sort of indications give hope to bulls. that maybe there is a bounce somewhere lurking. Maybe we'll perhaps get back to higher levels before whatever else is to come. But we need evidence, we need price action to support that, and I think we are in that discovery phase. We will stay in that discovery phase over the next couple of days or so. Nifty Bank as well, just to kind of tie in the levels, the 20-day stands at 47,000, and then above that, the 61.8% retracement is 47,344 or so. So GIFT Nifty will come up on your screen, indicating a 80-point lower start. But there is a lot lined up which could change that picture through the course of the day, starting, of course, with what the Bank of Japan does in the next 1 hour or so. Rima.
Yes, indeed. I think the Bank of Japan meeting outcome should be known at about 8:30 a.m. India time. So shortly from now, and just to put it in context, because the BOJ meet will take center stage today, they've had negative interest rates since 2016 at minus 0.1%. So even if they hike, they're probably just going to get to neutral territory or a 0% interest rate. They've been going through this decadal battle with deflation, and this perhaps will mark the end of it. Crude prices is another important indicator for our market, as Brent crude prices, as Prashant pointed out, are inching towards $87 per barrel. This means it could be negative news for oil marketing companies. They've been struggling for the last couple of days after that price hike of 2 rupees per litre. So IOC, HPCL, BPCL should be on your radar. You spoke about the US markets and how it was a little idiosyncratic in terms of the moves. So you had Google rallying about 4.5%. This is on reports that Apple will adopt Gemini AI for its iPhone. Tesla was another big mover, 6.5% higher on Tesla, on the possibility that Model Y price hike will take place from April. And NVIDIA, they're going through their first conference, and in after hours, NVIDIA, by the way, sold off and is down close to about 1.8%. As we've been pointing out, the level to watch on the way down will be 21,900. It ties in with the 50-day moving average, and it's also the level at which the markets have taken support for 4 days in a row. And on the way up, it's going to be the 20-day moving average, 22,200. We've broadly been in this range between the 20-day moving average of 22,200 and the 50-day moving average at 21,900.
Well, that's right. Rima and Prashant, you'll have gone through most of the global cues. So I'll just focus on a little bit more on the Indian data. And yesterday, actually, volumes were very, very low. In fact, the volumes are the lowest that we saw all the way since New Year. So that number should come up for you. The NSE cash market volumes were almost as low as what we saw on January 1st. Just take a look at that. So NSE cash market volumes extremely low. Maybe it's a year-end phenomenon. Maybe people are on vacation as well. But very, very low volumes is what we saw in yesterday's trading session. What have the FIs done? In the last 1 week or so, the net short positions from around 30,000 contracts have moved to around 60,000 contracts because they are adding some shorts and they're unwinding some long positions. And a net short market isn't such a bad thing, as I always say, because a glimmer of hope, a glimmer of good news could cause that short covering bounce. And currently, as positioning stands, 37% of their positions are on the long side, while you have close to around 63% on the short side itself. Two strikes I want to pull up to give you the broad range. On the upside, 22,300 should be a bit of a resistance level. On the downside, 21,850. And that perfectly ties in with what we are seeing in terms of active strikes. 22,250 called, 21,950 put. And the Nifty and the Nifty Bank, they've been defending crucial levels. So the 21,900 level has been getting defended on the Nifty, which is actually near the 50 DMA. And on the Nifty Bank, that 46,000 mark is getting defended, which in fact is the 100 DMA. So both these two marks, provided they continue to get defended, you'll pretty much be saying that still that uptrend is intact. Resistance, well, when do we get a fresh breakout? Once both these two indices go ahead and conquer the 20 DMA. The stock that I'm looking at, and maybe in fact it should be in your radar, we had a City upgrade coming in on Shree Cement on Friday itself towards the end of market hours. And yesterday, the stock ended virtually at the high point of the day. And the move, if you look at it, what Citi as well pointed out is in the last 1 year, Shree Cement has been a relative underperformer. The last 1 year or so, it's not moved too much. And this move that we saw yesterday, the ending at the high point of the day, it was backed with a good amount of delivery-based buying. So, keep an eye on the stock. It's been a relative underperformer, but you did see that, in fact, yesterday there was some delivery-based buying. So I think maybe keep an eye out on Shree Cement as well, guys.
Okay, interesting there. Let's get to the equity calls then. Sanjay Mukim of JP Morgan expects the small and the mid-cap space to remain volatile in the coming weeks. Indian market volatility in the election years tends to rise from March end, with margin funding and investor flows adding to the risk. Judging by the previous corrections in the small and the mid-cap space, he says there could be a 5 to 10% further downside from here. However, SEBI's stress test on small and mid-cap funds highlights there is ample liquidity, and that should help limit the risk of an extended or a sharper sell-off. Beyond the near term, beyond the near-term volatility, JP Morgan believes that small and mid-caps offer higher exposure to favorable themes like manufacturing, infrastructure development, EV, digital transformation, green energy, sustainability, and have historically offered a higher Sharpe ratio and higher alpha opportunities.
Okay, this is Sunil Kaul of Goldman Sachs, who says that over the past week, the reversal in small and mid caps in India has intensified. He says they are screening for stocks that appear vulnerable in case of sell-off and mid and small cap extends. Continues to expect further rotation towards large cap laggards and quality pockets of the market throughout the course of this year.
Let's get some money market views then. Abhishek Goenka of India Forex and Asset Management says Forex reserves rose in the week ending 8th of March. And even if we account for the revaluation impact of gold, it's still a sizable jump, indicating the RBI has put a firm floor under the USD-INR pair. He says the focus will now be on the Fed rate decision on Wednesday, as the overall balance of payments dynamics continues to remain favorable for rupee, as indicated by the latest trade data and FPI flows in March so far. He continues to expect the USD-INR volatility to remain contained and expects the pair to trade in a range of 82.5 to 83.2 against the dollar over the medium term.
Vishal Goenka weighs in on bonds. He says that it's a big week for central banks globally, with the Bank of Japan today. And expectations, of course, of a rate hike, the first since 2007. He adds US Fed and Bank of England later in the week are expected to be on hold. Continues to add government bond yields have been moving higher in India last week, and he sees a continuing widening trend with a lot of good news priced in. He expects the 10-year benchmark bond yield to trade in a range of between 7.07 to 7.12%. Okay, well, that's the views out there.